Hey, this is Matt from InvestiQuant. Today is Tuesday, May 11, 2021. Yesterday, the market saw a quiet morning session that then broke down into the afternoon, closing on the lows. And in doing so, we ended up with what's called a bearish engulfing candlestick pattern. A bearish engulfing candlestick pattern is one where the body of the candlestick engulfs the prior body of the candlestick. So that took place there yesterday, and we are continuing lower in the overnight session so far. So we're going to be looking at that candlestick pattern here specifically today with the setup that enters the market long at the open of regular trading hours, which is 9:30 a.m. Eastern Time, and exits at the close, which is 4:15 p.m. Eastern Time. Now, currently we are trading down. We're down below yesterday's low, but I'm just going to put gap down to try to keep as many samples as possible for this pattern. So I've got that selected. Next, I'm going to go grab that price action pattern where the candlestick is a bearish engulfing candlestick. That is right here in our candlesticks category. Next, I'm going to go into the indicator section, and I'm going to say that we are above a 200-day simple moving average, but the S&P closed basically right at the 10-day moving average yesterday, so I'm not going to include that since we're down a couple ticks below the 10-day simple moving average as of the close, but we were right there. So I think it's close enough just to leave it out and then keep as many samples as possible in doing so. And then lastly, I can hit view results. And here we go. These are the results based upon entering the market long at the open of regular trading hours, which is 9:30 a.m. Eastern Time, exiting at the close, which is 4:15 p.m. Eastern Time, when you gap down after a bearish engulfing candlestick pattern, and this is taking place above a 200-day simple moving average. Now, historically, the S&P has 58 samples dating back to 2003. The Nasdaq's coming in at 70, the Dow 52, and the Russell 46. If we look at the win rates on them, a couple of them are favored and a couple of them are pretty mild. So the S&P and the Dow are both favored. S&P coming in, 67% of these historically have closed above the opening print for the session. The Dow, 63% of those have closed above the opening print. Now, the Nasdaq and the Russell are nearly identical at 54%, so they're not quite as strong as the S&P and the Dow. If we look at the average win and average loss, the average loss is larger than the average win on the S&P. That is not the case in the Nasdaq, the Dow, or the Russell. So S&P is the only one that has had larger average losses than average wins, but it has had a higher win rate than every other instrument here. So historically speaking, 2 of the 4 have had favorable win rates, but on those, the S&P has had larger average moves to the downside. It's a little bit mixed there overall, but none of them have weak win rates here. They are at least neutral or favored historically speaking. So hopefully you found that helpful. Good luck today, and we will see you next time.